you'll move.
Broadcasting from the Kanowski-Bresny Studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, it is. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have, how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for an example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning, happy Friday. Welcome back to the Financial Exchange. It's Mike Armstrong, Marc Fandetti, and Tucker Silva with you on a Jobs Friday. We have the jobs report to digest, yesterday's Amazon earnings that came out, and finally we had a Michigan Consumer Sentiment Survey, which normally we wouldn't put in that first segment, but there was some interesting stuff on inflation expectations there. So let's start off with the jobs report received this morning at 8:30 a.m. Mark, highlights for you, what was important, what was unimportant. This was also accompanied by a year's worth of revisions, so it's a lot to muddle through.
The headline is unemployment remains very low by historical standards. Labor market remains quite strong, whether you look at the unemployment rate, which is just the number of unemployed people divided by the labor force. It follows from that the number of people who found jobs grew by more than the labor force did. Yep. Obviously a positive development. In a separate survey, businesses reported adding 143,000 jobs last month. That seems a little tepid relative to the pace of, say, early last year. Or
what do you think our 12-month average was for 2024? Like a quarter million jobs?
It was 168,000.
It was 168 for 2024.
Was the monthly average.
Okay, so we're at 143. That's not a huge miss.
Not alarming. More than enough to provide new jobs for new entrants into the workforce, which is obviously a key point.
So earlier last year, we saw the unemployment rate ticking up to that 4.3% range. This was back in, I think, June or July of last year. There was everything written about the SOM rule, which indicates that unemployment, it's just a look in terms of recession indicators, which says, hey, if unemployment rises by more than 0.5% on a rolling average basis over a short period of time, that there could be a recession, or very likely would be a recession in the near future. That's now gone because the unemployment rate went up to that 4.3 level, now back down to 4, and according to the revisions, might not have even ever gotten to that 4.
To the credit of this show, you and Chuck Zada talked about it a lot at the time. Empirical regularities, as researchers like to call things that have just happened without any strong theoretical basis, they're made to be broken, and it was broken.
It was. The main gains in this jobs report that we saw. So again, headline number, 143,000 jobs created in the month of January. Where we saw those jobs created, healthcare continuing to be a major contribution to the overall jobs numbers. 44,000 healthcare jobs created in the month of January. That averaged 57,000 jobs per month in 2024. Retail trade added 34,000 jobs. There's been really little net change in 2024. Social assistance jobs, 22K to the upside. Government jobs, up 32,000 in January. Healthcare, government continue to be one of the key contributors to job gains over the course of the last 12 months, and really speaks to, I think there's some questions being asked as to what exactly does that mean. And what it means to me is that you just couldn't find enough people in these jobs during COVID, and there's still been a long makeup process to get people back into jobs like teaching, like local government and healthcare workers in a lot of places.
Yeah, to me, I try not to look too closely. This is going to sound odd, but I try not to look too closely underneath the hood at the composition of these things. I just focus on, maybe because I'm a generalist, I'm looking just at the unemployment rate, which historically has been associated with, and this will tie into one of our early lead stories today, I think, historically has been associated with upward pressure on prices. So this relates directly to unemployment, which we'll learn more, to inflation, which we'll learn more about next week, because in the short term, these two variables are in perfect tension. Low unemployment and low inflation are, historically speaking, and for good theoretical reason, not really compatible.
We will get to the inflation impact shortly, but I do want to jump to this piece from Connor Sen, because it speaks to exactly what you're saying. And my first thought was, oh, good, Mark's going to tear this piece apart from our good friend Connor over at Bloomberg.
Couldn't get through the first three paragraphs.
The point that he makes in this article is that the job market is actually weaker than it looks, which is a crazy thing to say when the unemployment rate is sitting at 4%. Here goes his argument. Over the course of 2024, there were 2.2 million jobs added to the labor market. I'm sure those numbers have changed with the revisions out today, but this was his point. 2.2 million jobs created, 1.4 million were in the areas of education, healthcare, or government. In the 2010s, for example, the contribution from those industries was closer to 700,000 jobs per 700,000 positions per year. And so his argument is, well, what if those jobs stop growing at such a fast pace, and then goes on to provide no evidence that they might stop growing at such a pace. I think the underlying tone of the article is, well, hey, we have a Trump administration in place here that is talking about attempting to cut employment in government work pretty substantially. But I think it does a fairly good job of ignoring the fact that most of the government jobs that have been added over the course of the last year and several years have not been at the federal level. They've not been at the IRS. They've not been at the FBI or Department of Homeland Security. They've primarily been in local government jobs, working for your town, working for your city, your state, and educators, things along those lines. And so I think sometimes we get a little bit lost in the weeds of these pieces, and I'm not going to sit here and say that every area of the labor market is perfect. But when we start getting fear pieces like, oh, watch out, the labor market's not that strong, even though unemployment's at 4%, I have a tough time buying it.
It's Friday, so I won't mince words and waste anybody's time. He doesn't know what he's talking about. I mean, I'm not a labor market economist either, but I'll start every comment about the labor market with that statement. So take anything I'd say with a grain of salt, though maybe I know just by virtue of training, I've come across a little bit more than the average analyst in this area. He doesn't know what he's talking about. A job is a job, and particularly for purposes of forecasting inflation and forecasting future job growth, the composition doesn't really matter. Now, personally, I don't like adding more government than private sector jobs. What sane person would? But that's no reason to diminish the obvious strength, frankly. Now, he may end up being right, by the way. I'm sorry, I'm interrupting myself mid-sentence. He may end up being right. The tide may turn, and the manufacturing and other components may not step in to pick up the slack, but that's really
the
no
problem
reason
with
to
an
finish
argument like that is that it assumes he spells it out that like, hey, if this type of hiring slows down, I think the obvious
no kidding.
corollary there is, the Trump administration is talking about intentionally slowing down this type of hiring, and that is all true. But then it assumes that all else is equal. And there's a few things that we know aren't going to be equal compared to the last few years. Immigration is probably not going to look equal to what we saw in 2023 and 2024. The state of other areas of the economy, manufacturing could change. Other places of employment could change. And so what I hate about these types of arguments is it seems to run and intentionally contradict what we are seeing in terms of the facts on the ground about the state of the labor market. And yes, we too talk about the sectors, and yes, I would prefer to see a lot more robust manufacturing and technology hiring than government employee hiring. But the fact of the matter is all of them still contribute to the state of the labor market, how many people are still looking for work, and the reason that some people might not have been hired in retail might be because they were instead offered jobs at government.
I mean, we all remember the 1980s quite fondly. Government employment and military spending specifically exploded during that decade, made a huge contribution. Nobody thinks that detracts from the economic miracle relative to the mess of the late 70s that the 1980s were.
Right. Let's take a quick break. When we come back, I want to shift over to inflation. To your point, Mark, we had a sentiment survey that came out today. We have this jobs report. What might this all mean for the Federal Reserve, and how are we seeing markets reacting so far in trading? That's next here on the Financial Exchange.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street, right here on the Financial Exchange Radio Network. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Did you outgrow your timeshare and now you want out? but you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
All right, this segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
So before we move on from the jobs report, as we mentioned, 143,000 jobs created in the month of January, unemployment rate dropping to 4%. We had talked leading up to this about the revisions. They do these once-a-year revisions, and basically they take all the survey data that came in later and revise the numbers. So previously, before today, what we understood about the labor market in 2024 was that there was an average of 186,000 jobs created per month. With the new data that is now being displayed, we're now showing only 166,000 jobs created per month in 2024, which is not a huge drop. 20,000 jobs a month is pretty reasonable in terms of where the data came in. The expectations were for a potentially much larger swing and all of that. It did revise down the unemployment rate numbers as well. So overall, not a massive revision, and I don't think really much to speak of there, but definitely interesting to know that the expectation now, or the understanding of the labor market last year, was for slightly fewer jobs created per month on average in 2024.
Yeah, it doesn't change the story.
Doesn't change the story. It's still a good labor market creating jobs at pace or faster than the number of people entering the labor market. So still a relatively good story here. Want to shift over to inflation expectations because a few things are happening today. One, in the bond market, we've got the 10-year Treasury up about 7 basis points to 4.505%. And you also did have the early release of the University of Michigan consumer sentiment data today at, I'm not even sure what time, but
10.
It was 10?
Yes.
a.m.?
Yes.
Eastern time?
Yes.
Got it. And
standard.
This data gives us a few points. One, it does just give you an index that you can go back to the 1960s and look at in terms of how people are generally feeling about the economy. But I think importantly for this discussion, gives you some numbers in terms of inflation expectations. And what we saw here was, in fact, consumer sentiment coming down in early February to what is a 7-month low now. And most of that had nothing to do with job prospects or anything along those lines. Most of that drop in sentiment had to do with expectations around tariffs and inflation. What do you read into this? Is this? I always say to take these, what I call soft data points, with a grain of salt, because they are talking. It's not a measurement. It is a survey. You're asking somebody how they feel about something rather than a binary yes or no type question. So the jobs numbers, for instance, are you working? Yes, no. This is much more, how do you think things are going to develop? And people are oftentimes wrong. But what does this data mean to you, Mark, if there's anything significant from it?
It's a big jump. It does get your attention. It's consistent with what we've seen in financial market
What's a big jump
indicators.
to start here?
The 1 percentage point increase in year-ahead inflation expectations reported by this survey.
So last month, when asked, consumers expected prices to rise at an annual rate of 3.3% over the course of the next year. Now consumers are expecting them to rise at an annual rate of 4.3%.
So we pay attention to expectations because of the experience of the 1970s and because of the insight of, I know you've heard the name, and I've got to bring it up every time I think I'm on the show, because the insight of Milton Friedman, and one other guy, Ed Phelps, but Friedman gets the credit. He recognized that you can't keep fooling people by printing an increasing amount of money and driving up inflation. Eventually people figure it out and start to front run it with wage requests, and then you end up in the vicious cycle that we had during the 1970s. You could sum that up by saying Friedman had the insight that you can't fool people indefinitely. They eventually figure out that the money supply is growing too fast. They request greater, or they demand greater wages to keep up with it, and this is how you get the type of persistent breakout inflation. There were other culprits in the 70s, but the underlying inflation component was attributable to too much money supply, too much demand. Okay, with that background, inflation expectations have ever since been watched very closely.
Sure.
Because they are part, we recognize now, of the inflation process.
A self-fulfilling prophecy, if you will.
That's a great way to put it.
If you think prices are going to go up in the future, then why would you hold off on a purchase? Right. If I'm thinking about replacing my car 12 months from now and I think it's going to cost $2,000 more than it does today, then I'll just do it now.
Yeah, that's a part of it too. There are other measures of inflation expectations. You said that surveys are soft, and you're right in that they're meant to elicit somebody's opinion. We also have financial market measures. There are lots of them. Probably the best known is the break-even, the 10-year inflation break-even, which can be derived from the yield on the 10-year Treasury, which, as you pointed out earlier, is about 4.5%, and the yield on the 10-year inflation index Treasury.
Right.
We haven't been able to do that for very long. Well, it's like 30 years now. But since the late 90s, the Treasury has issued inflation-protected securities. If you take the difference, and their yield is therefore real. What you see quoted is what you get, regardless of what inflation is. One of the great things about inflation index treasuries is that they allow us to ascertain what the market thinks inflation will be over the next 10 years. That number is about 2.4%. It's been ticking up, though, is the larger point over the past few months. And it's probably all related to, Mike, I think you've already pointed this out, tariffs.
Right.
It's been well publicized that tariffs are taxes on goods and that they push up prices, at least in the short term.
So again, this Michigan Consumer Sentiment Survey contains a lot of different data points. The one to me that matters, that is significant, is that when you asked people back in January what they thought inflation would be over the course of 12 months, on average, they said 3.3%. In February, they said 4.3%. That is a significant jump.
Energy prices have been coming down. So normally the culprit's gas,
right?
But that's not a suspect in this case because gas and energy have been.
This to me is a tariff story.
Yeah, I think so.
And I guess my question is, when we go get this data a month from now, if we assume that there are not tariffs on Canada and Mexico, which, big assumption, don't know that that's going to be the case.
Who the heck knows?
But will these inflation expectations drop again now that because as of Monday, we were all sure that there were going to be tariffs on Canada and Mexico, apparently. And now we don't think so. I'm guessing this survey was conducted alongside those expectations. And so maybe those inflation expectations have fallen a little bit. We'll have to wait and see. The other piece that
Are you surprised, by the way, can I just ask,
Please.
I didn't think people were paying that close attention to this stuff, but apparently
yes,
they
I absolutely think so.
Okay. You talk to a lot of clients and a lot of prospects.
I think when you talk about tariffs on Mexico and Canada, there is a very different mentality to it than when you talk about tariffs on China. How many people do you know that have family or friends that live in closeness, family? I think it has a lot to do with how many people know somebody who works for an automaker, for example, that does a lot of trade with Canada. You go to the grocery store and you just know that a lot of your products are imported from Mexico. So there's just a closeness between those two things that don't quite apply to China, even though we do import a ton of stuff from there. The last piece of this is that sentiment among Republicans had been increasing since August. This was the first time it declined since then. And so this is not necessarily just Democrats crying about everything, which they are. It's their sentiment deteriorated to the lowest since 2020, but Republicans, too, taking a step back into their expectations. We're going to take a quick break. When we come back, full market update from Tucker with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818, 800-378-3818, 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699, or request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are trading modestly lower at this point as investors react to the January jobs report posted earlier this morning, where 143,000 jobs were added last month, lighter than expectations of 175,000 jobs added. However, markets did turn negative after the Michigan Consumer Survey showed higher inflation expectations. Right now, the Dow is off by 99 points, nearly 0.25%. S&P 500 is off by about 1/3%, or 18 points, and the Nasdaq is down by 2/3%, or 128 points. Russell 2000 is off just over 0.5%. 10-year Treasury yield up by 6 basis points, now at 4.50%, and crude oil is up just over 0.75%, trading just above $71 a barrel. Amazon off by over 3% after the tech giant beat fourth quarter earnings and revenue forecasts. However, the company projected lower than expected sales and operating income. Instead, it plans to allocate a record amount to capital expenditure this year for AI. Meanwhile, Tesla sales, in China fell 11.5% last month amid greater competition from Chinese rivals. Tesla shares are down by about 1/3%. Elsewhere, payment company Affirm Holdings handily beat earnings and revenue expectations, reporting $866 million in revenue for its quarter, well above forecasts of $807 million. Affirm's gross merchandise volume, or the total value of transactions on its platform, topped $10 billion for the first time. That stock up by 21%. Pinterest up by 18% after the social media platform posted strong quarterly results where its revenue jumped 18% year over year. Its monthly active users also climbed 11% from a year ago. ELF Beauty stock is down by over 19% after the cosmetics company cut its guidance for the fiscal year. Bill shares down by 32% after the billing software company's quarterly revenue guidance disappointed investors, and shares in video game maker Take-Two Interactive jumping by 14% after the company's quarterly loss was narrower than expected. Its CEO also said this year is shaping up to be one of its strongest, with Grand Theft Auto due out this fall. I'm Tucker Silva, and that's Wall Street Watch.
So Tucker mentioned markets selling off today, and I think stays in the category, for me at least, of good news being bad news. The labor market report was fairly solid this morning. Unemployment rate remains low, but this inflation expectation survey out of the University of Michigan speaks to what that actually means for people when they think about where prices are going. And so what we're seeing in bond markets, I think, responds to this. You've got the yield on the 10-year, like I said, up to over 4.5%. U.S. equities largely off, and those expectations for a rate cut at the next Federal Reserve meeting coming down as well. Yesterday, there was only a 16% chance of a rate cut at the next meeting on March 19th for the Federal Reserve. That's now down to 8.5%, basically cut in half. Yeah, no chance of a rate cut unless the economy turns south between now and then.
Anyone still asking that is asking the wrong question. The right question is probably, are they going to have to, and I know Chuck has asked this, and he's being a little bit mischievous, but I think the question is fair. It should always be asked. Sometimes the answer is no, stupid. Sometimes the answer is, ooh, I don't know.
Start with the question.
The Fed, yeah. Oh, did I not? Did I not actually ask the question? Has the Fed loosened too much in the past several months? The Fed's
Remember,
job,
they cut rates by a full percentage point in the second half of last year.
So their job is to keep the car going. If the economy is a car, you want to keep it going at a constant speed. You're watching your tachometer. You don't want to go into the red zone. The red zone means you've printed too much. You've supplied the economy with too much money. You've hit the throttle a bit too much. That pushes the economy beyond its productive capacity. The result is inflation. Now, I'm leaving out so-called supply shocks because they're unpredictable. I'm thinking just about the core component of inflation. That's the Fed's job, is to keep the core component of inflation at about 2%. I'm not talking about ex-food and energy core that we often report. I'm talking about underlying inflation, the part that the Fed can control. They're always trying to keep that tachometer, the needle on their tachometer, out of the red zone. It's their perennial task. And that job, I think, got a lot harder. I mean, a lot this morning with this hot employment report. Not overly hot, but nothing that suggests weakness.
I mean, 4% unemployment rate. We've come
hot.
down considerably.
We've only seen that a few times in the past 60 years.
Yeah.
It's hard to impress how unusually strong the labor market is. And an alarming, and I don't think that's overstating it, jump in inflation expectations, which are a key part of the inflation process. I think the Fed's probably on the edge of its seat, if not outright standing up this morning.
So Chuck and I last week were talking about just what would need to happen for rates to come down anytime soon at the Federal Reserve, because they very much seem locked into where we are today. And his conclusion was unemployment at 4.5. I was saying maybe they start talking about it at 4.3, but that seems off the table today. Where do things need to get to in your mind for, remember, not you, remember, for this Federal Reserve, where do you think things need to get to?
I'm referring to the same models, not as sophisticated, but I have the same mental picture as anybody trained in economics does. You're always thinking about the so-called Phillips curve, this relationship. But you've all heard it. If you took a macroeconomics course, you were introduced to the Phillips curve. It's the relationship
like it or not.
between inflation. Yeah, damn it. So like it. It's the relationship between these two things. They all think in these terms. Certainly the economists preparing data for them think in these terms. And would unemployment above 4.5% trigger further easing? I don't know. It depends on what inflation is doing. What if the so-called natural rate of unemployment, and there is such a thing even if we can't measure it, what if it's going up now for different reasons? It does fluctuate. This is another challenge the Fed has to deal with. You can't view the unemployment rate outside of the present context, say compare it to the 80s or 90s or 2010s and say, well, it was fine at 4 then, it should be fine at 4 now. No, the structure of the economy is constantly changing. Another challenge that the Fed faces, Mike.
So when it comes to all of this, I think, again, grounding it in terms of what it means for you. And inflation is very obvious. What it means for you is that prices could go higher if consumers are correct in the way they responded to surveys recently. What it means for equity markets, I want to hone in there for a moment too, and ultimately that's unknowable, but I think there's a few things that are true. One, the overall sentiment over the course of the last year was that, hey, the worst of inflation is behind us, and interest rates can slowly start coming down now because the worst of inflation is behind us. If that turns out to not be true, that we have prices, which, again, as of the last reading on CPI, they are not surging. They're up to 2.9% year over year. That is not something to be worried about. But if we get a reversal of that, which, again, today, very obviously is what markets are concerned about. They're not worried about recession. They're not worried about Amazon's earnings. They're not worried about
I know
really
fixed income's
anything.
different.
But if you reverse that narrative and suddenly this becomes a market where you're saying, oh, yeah, inflation's back up and maybe the Fed needs to pivot to rate hikes, that is a very different market. That is a completely about face compared to what we were dealing with a year ago. And that's what I think about when I consider what does this data mean for the average person? Well, it starts to shift the narrative of where we were 6-12 months ago.
Today's data should jolt the Fed. It's not jolting equity markets. It's jolting bond markets, as evidenced in rising interest rates on longer-term government bonds. To me, it does change the balance of risks, if you will. Clearly, the labor market's not slowing down. That's historically associated. Now, I just said earlier that the natural rate changes just because inflation started to accelerate at 4% in one decade doesn't mean it will right now. But with core, or underlying, I should say, inflation, I'll use those two terms synonymously sometimes, somewhere in the high 2s, maybe 3s, well above the Fed's goal, way below where it was in the extreme aftermath of COVID, and will probably, absent a so-called supply shock, a big jump in energy prices or something, not get back to 8-9%, but could be uncomfortably high for the foreseeable future if the Fed doesn't change its posture or at least its rhetoric to bring in these inflation expectations. 4+% inflation expectations are absolutely unacceptable. The Fed's got to start jawboning those down.
Let's take a quick break. When we come back, there have been a lot of volatility in terms of interest rates with the Fed's rate cuts, the increase in the 10-year. Wall Street Journal has a piece out today, 3 places to get the best returns on your cash. We'll be covering that next here on the Financial Exchange.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your healthcare plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health wealth is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
Mark, a year ago, tools like money markets and things like that were paying up over 5%. This was prior to the Fed embarking on their rate-cutting cycle most recently, where they did bring down rates by a full percentage point. And there's been more than enough written about the impact on that to mortgage rates and things like that, so I won't focus on why this happened. But you saw short-term rates, like what you get on a CD or a money market, come down by a full percentage point. Mortgage rates, on the other hand, go up by a full percentage point. And so for most people, didn't really get a great effect from lowering rates at the Federal Reserve. Mainly this benefited some consumers benefited some investors who saw rates coming down and lowered yields on short end deposits. But by and large, not a huge effect for most people. And I'm getting more and more questions, I guess, about, hey, the rates on my savings account came down further than the full percentage point in a lot of cases, or maybe they were only at 4.5% to begin with, and now it's down to 3.5%. And a lot more people saying, it was really easy getting 5% on my cash. Now I need to think about something else. So Wall Street Journal brings up a few different things here to talk about. And the first they bring up is just a high yield savings account. Like I talked about, that's what people are already seeing, is those rates coming down into the mid 4s, low 4s, even 3s in a lot of cases, depending on which bank you're talking about. There's obviously, certificates of deposits to look at, and, then there's money market mutual funds as another option that's out there. I think one of the key things that I would focus on would be, look, we just got done talking about where rates could go, and hypothetically, are rates going to go even higher? I would still say that most market participants at least think that while they might not come down quickly, rates are probably more likely to come down over the course of the next year than up over the next
short-term
rates,
the Fed exerts heavy control over.
And therefore the rates that people receive on cash savings. I'm not sure that that's going to be the case.
Particularly in light of today's data. I think it pokes some holes in that thesis, so to speak.
I think it does as well. But there's another somewhat little-known fact about these things that I think is worth considering too. And the Wall Street Journal article actually doesn't talk really about Treasury bonds, which for people unfamiliar, you can go and buy a Treasury of a 1-year maturity, of a 6-month maturity, really any maturity that you want. And the rates that you see on those tend to follow similar types of tools like CDs. One of the big differences, though, when you go loan your money to the bank in the form of a certificate of deposit, you pay both federal and state income taxes on that interest. When you loan the money to the United States government or one of its agencies, you do still face federal taxes on that interest, but you avoid the state income taxes. Doesn't matter if you live in New Hampshire, but assuming you live in one of the other New England states, or all but I think 15 states across the country that don't have an income tax, it can actually make a meaningful difference in your after-tax return. The main message that I've been delivering to my clients, at least, has been, look, we don't know where rates will go over the course of the next few years. 6 months ago, I would have told you very much likely down, but we just don't know. What looking at things like CDs, like treasuries, and other tools like that allows you to do is at least create some certainty with what's going to happen with your money in the short term. If you're sitting on cash, and I know that a number of people, this isn't even a possibility for, the amount of credit card debt and things like that that's out there is enormous. But if you're sitting there saying, hey, I've accumulated this bucket of cash, maybe it was an inheritance, maybe it was just additional savings over the course of the last few years, and I've seen my rate of return come down on that, and now I'm in this position where I just don't know what to do. we'd love to talk to you about what those alternatives look like. And it's usually a combination of a number of different tools, but it is one of the trickier questions to deal with because you were sitting on this thing that for years was paying nothing, suddenly started paying a lot more, and that rate is in the midst of a pretty significant change. If you want to learn more about the tax implications of what you have your cash sitting in and alternatives that might be out there for you, give the folks at Armstrong Advisory Group a call. Let us educate you on how the tax scenarios that we all face, depending on what state we live in, affect how much return we're able to generate once those taxes are paid. The number for the Armstrong Advisory Group is 800-393-4001. Again, that's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Just yesterday, we were speaking about the looming deadline on the federal buyout offer for workers that was sent to all, I think, 2 million workers out there. And a federal judge in Massachusetts has paused that deadline from yesterday to, I think, what was it, like a week from now, something along those lines, for this to go into place. As of yesterday, some 40,000 government workers had agreed to resign ahead of that deadline. The White House said it was expecting between 5 and 10% of the federal employees to take the deal, which would have been closer to 100 to 200,000 employees.
And many of those who did take it may have been planning on retiring. You had a couple of examples of this yesterday from real-world experience, Mike. They may have been planning to retire anyway.
Yeah, we don't know with any degree of certainty, but I certainly would be willing to bet that in that 40,000 is a high concentration of people that were looking at retirement in 2025 anyway.
Well, Bloomberg reported that 60-some-odd, roughly 65,000 retire in any given year. So as you pointed out, I think yesterday, if you're planning on retiring any time through the end of this period during which you can continue to collect your salary under the Musk scheme, you would have to, you'd be an idiot, forgive me, but an idiot not to retire today.
Yeah, so we will see where this plays out. I think in all likelihood, I don't know, I've read a fair bit about this and heard a lot of commentary. There's not a whole lot of question as to whether or not the White House has the ability to do this. So I suspect that it will still go through in some way, shape, or form, but being delayed at least temporarily, which, good case if you're one of those federal employees, a few extra days to consider your options when it comes to this potential buyout. But I, once again, will just call into question, time after time, we see these promises coming from the Department of Government Efficiency around how big the sweeping changes are going to be. They come out with these giant numbers, and then once again, they get walked back pretty substantially in terms of what we actually see. So
yeah, they really blew credibility in record time. I mean, it speaks to setting achievable goals in the short term in any walk of life, but you don't go to your manager and say, I'm going to double sales next year, Mike.
Indeed. So we will see where this all plays out, but for the time being, at least, the promise on the buyout of federal workers has been put on ice by a federal judge in Massachusetts. Quick break, but a lot more to cover in the second hour, including more tariff talk, where we're talking about, and specifically in the insurance industry. That's next here on the Financial Exchange.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Desi is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
Visit GoRedForWomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have, how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth, that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning, happy Friday, and pardon me, welcome back to the Financial Exchange. We have markets in sell-off mode this morning on the tail of two news stories today. The first was the jobs report released this morning at 8:30 a.m. Generally a good news story there with 143,000 jobs created in the month of January. Unemployment rate edging down to 4.0%, up from a 12-month previous understanding high of 4.3%. Major job growth across sectors. Go ahead, Mark.
It's been so low for so long, I don't think we appreciate exactly how extraordinary unemployment at or around 4, never mind below 4% is. We were there a little bit in the very late 2010s, but you have to go all the way back to the late 90s, and that was briefer than the current episode. And then before that, to the late 1960s. It's really extraordinary.
Yeah, unemployment rate as low as it is right now. To your point, we got there briefly prior to COVID. We never got there before the Great Recession. We did get there prior to the dot-com bubble, but other than that...
It was about a year and a half.
Other than that, getting down to those levels, to Mark's point, the last time that happened was late 1960s.
And it went on for several years. The 60s was a remarkable run, and it ended very badly. The Fed kept policy too easy for too long, and current policymakers are very conscious of that mistake, obviously.
So if I continue to read stories from people saying, watch out because this labor market isn't as strong as it looks, just give me a break.
I got to say, Mike, the White House came out with a statement this morning.
I don't think that's what Connor Sen sounds like, by the way. I'm sorry.
That's an interesting voice.
Poor Connor. If Connor was a listener, he's tuned out permanently between me and you dumping on him. I've got to correct or at least point out that this is flatly inaccurate because there are some news channels, which I won't name, that are just going to report this uncritically. The White House said this morning, today's jobs report reveals that the Biden economy was far worse than anyone thought. I'm not going to read the rest of it because that pretty much captures the tone. But that is so utterly ignorant. You don't have to give Biden credit for the low unemployment rate. It happened under his watch.
Yeah.
It would have happened had Trump been reelected too. Economic growth and plus or minus 0.5%.
Yeah, probably.
Maybe Biden ran the economy a little too hot with that last stimulus package, but there's very little any president can do to influence the forces that drive economic growth and thus unemployment and even inflation, unless you make a big unforced error. This type of response, I think, is unhelpful, and they'll probably just keep repeating it, and then it'll get amplified by their cheerleaders at their favorite news network, and enough people will accept it that it'll become somehow truth.
Yeah,
it's really quite inaccurate.
The revisions
I'm sad to see this. It's so dumb.
Sad. It's
no,
completely
I am,
unsurprising.
Though. If this is where we are, it's sad.
Yeah, it's dumb
because it's dishonest,
and it also
overused term, but it is.
It also just furthers the emotional investing that people do all the time. Labor market, again, revisions came out, not substantial changes in 2024. It looks like on average there are about 20,000 fewer jobs created per month in 2024 than was previously understood. Not a huge shift. The big piece of information from Michigan, the University of Michigan does their monthly consumer sentiment survey. There, the big change that we saw was expectations for inflation bumping up by a full percentage point from 3.3% all the way up to 4.3%. That is a meaningful shift.
Now, that is bad news. If the White House wanted to comment on something, they should have commented on that.
That is plain.
And pinned that on the last guy.
Plain bad news. The markets have been kind of all over. When we started talking just 3 minutes ago, the NASDAQ was off by more than 1%. The S&P was closing in. Right now, Dow off 221 points or 0.5%. S&P off 30 points or 0.5%. And the NASDAQ off 170 points, a little more than 0.8%. Bond yields up on all this data. So we'll see where things go, but it's been fairly choppy in early trading so far. Speaking of all these inflation expectations, just one other area. We've been talking a lot about insurance recently because of the LA wildfires, and just another area of inflation and tariffs that I hadn't really considered. Piece from the Wall Street Journal, tariffs could lead to higher insurance prices for U.S. consumers and businesses, and on the surface, this doesn't make any sense, right? We don't import our insurance costs from Canada or Mexico. They would not face any sort of direct tariff. But when you think about what insurance is, which is providing you with money when things are destroyed or go wrong, if all of a sudden it costs a whole lot more to build those things that get destroyed, then yeah, you can see those insurance costs go up. And I would likely say that the primary reason auto insurance rates have gone up so much over the last several years has been because the cost of repairing vehicles has gone through the roof over the course of the last decade.
I hadn't made that connection myself.
Nor
I
had
thought
I.
It was an interesting angle.
Yeah, nor had I. So it's just a different angle that I hadn't really considered. And yeah, if you see lumber costs go through the roof, then it's going to be more costly to rebuild a home. It's going to be more costly to repair a car because of the parts coming from Mexico and Canada that could face tariffs. Again, I have some doubts as to whether or not those tariffs are ever going to go into place. But just one more piece that we wouldn't necessarily expect prices to move because insurance is a domestic industry.
This all just makes the Fed's job, I know we said this, at least I did, probably too many times in the last hour, but their job got a lot more complicated this morning, not just because of this story, but the unusually strong employment numbers and the consistently strong strength in the labor market, a huge jump in inflation expectations. Yeah. We know expectations feed into the inflation process, and the looming, and this is probably going to be a persistent threat of tariffs for the next several years, no matter who the president is. They're now a prominent tool in the chief executive's toolkit.
I was going to ask a question, but it looks like somebody's already answered it online. I'm going to ask anyway. Do you think State Farm will have a Super Bowl commercial this year?
I saw that they weren't. Like they
Yeah.
initially planned to with the whole Jake from State Farm thing, but I think they backed off on it.
Yeah, so I was wondering about this with Vinnie Penn this morning openly on air. Hey, will they actually air a Super Bowl ad? And I don't know who this source is. Sportico is reporting that State Farm pulled their 2025 Super Bowl ad probably entirely because of the Los Angeles wildfires.
Yeah,
But
confirmed. Yeah.
State Farm was all in on California. They were the largest issuer of insurance in 2022 in State Farm was in the state of California, accounting for more than 20% of that California market. And then promptly in 2025, they began pumping the brakes. And maybe pumping isn't the right word. They began slamming on the brakes in their insurance market. And you saw them non-renew or cancel thousands of policies. Just months before the January fire, the insurer canceled around 30,000 homeowners, including 9,500 in the neighborhood that burned last month. Many of those ended up on the state-run insurer of last resort. And, as always, there are questions after one of these types of crises. State Farm's getting a very close look in terms of their practices. Now, State Farm didn't know that a wildfire was coming to California months before they started canceling policies. They also weren't canceling policies as far as I know, in the middle of fires raging in the area. So I don't think either of those two things were happening. But the allegations are that, look, this company, which, by the way, State Farm Insurance of California, is a completely different subsidiary without access to the assets of State Farm, the insurance company, which that's concerning and misleading. They spun off their Florida and California businesses because they said, wow, these things could just go belly up if the you-know-what hits the fan. But the California market in particular was being pretty aggressive with issuing policies over the course of the last few years, raking in dough, and then found themselves quickly in a place where they could not sustain that if a big wildfire came around. The only piece of this that I find pretty concerning and maybe somewhat misleading is the fact that the California unit of State Farm gets to license the brand, the logo, and the name of State Farm while being a completely different insurance company. So State Farm, the nation's largest home and auto insurance company, has more than 90 million customers nationwide, 1 million home policies in California, and a strong credit rating and a surplus of well over $100 billion. The California unit of State Farm, which is a completely separate entity that can go bankrupt on its own, was heavily in the red even before the latest fires. So that part to me is pretty questionable. And I do blame State Farm, but I also blame the California state regulator for, again, allowing this type of practice, refusing to update premiums, refusing to let insurers use the most up-to-date mapping and forecasting software when it comes to wildfire risk. And yeah, State Farm is going to bear a lot of the blame here, but frankly, I think a lot of it lands with the insurance commissioner.
I think it's an example of a problem that the market, if you let it work, could fix. It would result in some uncomfortably high premiums.
Yeah, some really difficult truths.
Right, exactly. We're all going to be faced with this over the next few decades, not to the extent that California is or some other markets that are subject to extreme forces of nature that are being amplified by.
Yeah, this is not a solution that there are some problems that have no real market solution, and those are legitimate areas. Let's see.
Without getting into public goods and like national defense and all that, all the classic examples, it's
electricity. I guess access to water and electricity.
Yeah, I would call those public goods.
Yeah, public
those
goods are the main ones that
you
I
need
I
a
think
monopoly
of.
to provide.
Yeah.
But other than that, and it could just be because it's my religion, I don't think there's much that markets can't figure out. You may not, like you said, Mike, the solutions might be uncomfortable. They might be inequitable.
Yep.
But the market will fix it.
Yeah, and that has more than much else been the main problem in California and Florida, which is the state has basically encouraged non-market solutions, allowing people to build in areas that are very risky and should otherwise be unaffordable to build and live in.
Yeah, that's what the price signal's meant to do. It's meant to tell you, no, don't build there.
Let's take a quick break. When we come back, going to have a little bit of trivia next on the Financial Exchange, followed by Amazon's earnings. That's next.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Time now for trivia here on the Financial Exchange. And Amazon has been one of the most dominant players in U.S. stocks over the past 10 years, but that wasn't always the case. Amazon was on a roller coaster ride for a decade until the stock started its meteoric rise in 2012. Trivia question today for you. What year did Amazon go public? Once again, what year did Amazon go public? Be the Eighth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the eighth correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
Am I like overheating right now, or was that the fastest you've ever spoken, Tucker?
Sorry.
That was quick. No, not the temperature. You were just
No,
rapid
now
firing
I am
on
hot.
Amazon.
When you said hot,
Okay,
now I am hot.
Fair enough.
So I turn on the air conditioner.
Amazon stock, by the way, down about 3.75% this morning on yesterday's earning news. Overall, they joined the crowd of giant tech companies that in total plan to spend over $300 billion on AI in 2025. That includes the likes of Amazon, Meta, Microsoft, and Alphabet, who have all reported their earnings so far. Any key takeaways on these earnings calls for you, Matt, Mark? Not Matt. Your name's not Matt.
We don't have.
Is there a Matt? Yeah, I was quickly going through.
I was
my mental
speaking to a
Rolodex.
Matt yesterday, and we've got a Matt around here somewhere.
Well, yeah.
He's never done radio, but nonetheless.
Okay.
Mark.
All right. It is interesting that they can't keep up with demand for AI-infused cloud server-based services. The issue is not that people don't want what they're selling. It's that people want more of the latest, and they can't make it fast enough. That's my kind of, and this is true of all the big cloud providers.
Yeah.
Right.
I think they missed slightly on those earnings, and you're right. It was mainly from a capacity issue rather than a demand issue. And so that is telling and interesting. The biggest takeaway that I have from all of this, I was very curious about what types of questions were going to be asked and how these companies were going to direct answers to the question of what does the DeepSeek innovation do to your business? They were all asked that question. And I think by and large, the answer was, we don't know yet, but we're going to keep pouring money into investment because this is where the money is going to be made, regardless of the innovations on DeepSeek.
And if DeepSeek has indeed found a shortcut, granted, it's standing on the shoulders of what other, I'll just call them engines, have done, but it's a shortcut nevertheless, which could significantly reduce the capacity demands of something like this, and thus reduce spending demand. It's a little odd to me that they're not hedging a bit. Well, maybe we don't need $100 billion. Right. Maybe we only need 25, 50, or some sort of moderately more conservative estimate over the same time frame. Why are they not hedging it all?
Yeah,
why are they still going full steam
with
the old model?
I think that the answer that they would provide you would be, look, this shortcut that DeepSeek found, if it ends up being as true as they are claiming, opens up the demand for even more AI at a cheaper price, and we will be the beneficiaries because we will be the ones providing the computing power to a larger range of customers. I'm just not sure I buy that argument yet. But that seems to be the case, is they're saying, look, lower prices just means more demand, more consumers buying this stuff, and more people wanting to do this because it'll be more accessible, not less, and therefore the total pie will grow. I call that into question a little bit because the fact of the matter was, up until we knew what we think we know about DeepSeek, which came out now 2 weeks ago, the status quo was, if you are not a multi-trillion-dollar company, you can't afford to play. That was the truth of it. Is if you don't have a few $1 trillion, not in market cap, or a few $1 billion to spend on R&D and the latest and greatest employees to be able to research this stuff, then you're not going to have any role in developing the next AI tool. And so Microsoft, Meta, Google, Amazon all sat there in a place where there wasn't much competition from the development of the eventual AI tools that people want to use. I think, and this is very early to be able to guess, but I think that this innovation opens up the door for many companies that are a lot smaller to compete. And that's what's fascinating to me, which I think is a good thing for development, for innovation, and potentially a terrible thing for existing dominant tech players. But only potentially. Not sure. Not certainly.
I guess maybe they're so committed they feel like they can't turn back, or the market expects them to continue again full steam ahead with what I'll call the old model, even though that might be premature?
Yep, and I think by and large you're right in terms of why they responded the way they did is because what else are you going to say? We're already hundreds of millions, billions of dollars into this. We can't suddenly say,
seem like they're,
let's change course.
Are they whistling? I'm asking a rhetorical question here, but are they just whistling past the graveyard on this? Their plans haven't changed in the past 6 weeks, but the landscape may have changed dramatically.
Maybe, but I have no evidence that they actually believe that they're whistling past the graveyard. I don't think they're intentionally.
I'm just wondering if that's not
whistling past the
motivated. I'll
graveyard.
play psychologist here and say, is this motivated reasoning? Can you just are you choosing not to see that all this sunk cost is something you may have to walk away from, or that somebody else may be able to replicate what you've done much more cheaply?
That's about the $10 trillion question, isn't it, Mark? It's about the $10 trillion question that we can't possibly answer. So that's the wrap on the big tech earnings that we saw so far, and a lot more to come, obviously, in coming weeks and months as they navigate the new technology. Let's take a quick break. When we come back, a little bit of Tesla news, further bad news in terms of sales numbers. We'll cover that next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline Qualification Line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, trivia question today was, what year did Amazon go public? That'll be 1997. IPO'd on May 15th of that year at $18 a share. Yeah. Greg from Fitchburg, Mass. is our winner today. Taking home a Financial Exchange Show t-shirt. Congrats to Greg. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Tesla, which is down a little bit today, about 1.25%, is being reported that their Chinese vehicle sales fell 11.5%. For probably several reasons, but one of them being intense competition from Chinese rival BYD, which saw 296,000 sales of pure electric and plug-in hybrid vehicles last month, which is up 47% year over year. Furthermore, earlier this week, we reported that Tesla's sales in Germany plunged 59% in January. So my main question is very simply this. If you can't sell your cars in Europe and you can't sell them in China, where are you going to sell these cars? Because I don't think you're going to have, great results selling electric cars in Africa where the infrastructure is no good. I don't think you're going to have a lot of results in Latin America, would be my guess. And U.S. sales have been plateauing on EVs for years. So why should I be optimistic about your future is my main question when it comes to Tesla, whose stock, by the way, is up now 97% over the course of the last 12 months.
Yeah, the amazing thing is that Tesla management has convinced shareholders that none of this matters.
Yeah.
And analysts too, apparently, most of whom have buy ratings on this company. Is it a car company? Is it an AI company? Is it a cab company, an autopiloted cab company?
We damn well better have some robots and self-driving cars post-haste if this is going to continue. But I don't know. Maybe I'm missing the boat on U.S. sales, but I've voiced this before. I'm worried about Tesla's U.S. sales because half the country doesn't like this administration very much. Not half, maybe 40%.
Well, he's certainly
is
not
very
doing
upset.
anything to endear himself to anybody. He's not.
Yeah.
He seems to be trying to alienate the maximum number of people.
Well, I don't know about that. I think he is doing a pretty successful job of cozying up to conservatives.
but
historically they don't buy
cars.
EVs. So I don't know what this means for Tesla. It's a lot of looming questions, and I think it is an important pivot point for Tesla. Maybe they are on the verge of a technological breakthrough that I haven't seen, but a bit of a boy who cried wolf syndrome when it comes to Tesla on those innovative breakthroughs because they've been promising a lot of technological stuff for a decade.
Since when has ideological appeal ever been a good business strategy? I can't think of a company that, and he's not trying overtly, I don't think, although he is effectively doing this. He's not overtly marketing to people who are more what he would call conservative. I would call myself conservative. I don't know what these people are. They're not traditional conservatives. But anyway, I'm splitting hairs. It's just an odd marketing strategy, Mike. I've never seen a company say, shop here unless you're libertarian.
Yeah, seems like a weird decision.
The calendar has turned and the cold is here to stay, so now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Scott Bessent seems to be attempting to calm markets. And I have to say that so far, the commentary from Bessent himself has been about the most consistent and kind of as anticipated. We talked a lot about this Treasury Secretary pick leading up to it, but very consistent and very straightforward in terms of his goals when it comes to the Treasury. The furthest out that I think he's had to go is commenting on Elon Musk's and Doge's access to the Treasury Department, but he has not massively pivoted in terms of where they're going to issue new debt. He has not massively pivoted on his view on the Federal Reserve or commenting on it, and so seems to be delivering some degree of calm to markets.
Treasury Secretary should be name 5 of them historically. I don't mean to put you on the spot.
Yellen,
I was going to say
Bessent,
other than Janet Yellen.
And Manouche are the 3 that I can
okay,
easily
so that's probably most
name.
people don't pay too much attention to it. Does anybody remember who, I don't know, George W. Bush's first Treasury Secretary? It was a failure. He lasted like a year. Nobody remembers. It was the chairman of Alcoa.
Do you?
No. I remember only that he was the chairman of Alcoa, and it was viewed as being Paul O'Neill was his name, excuse me.
Okay.
But you'd be hard-pressed. Who was Bill Clinton's first Treasury Secretary?
No
Bob
clue.
Rubin was the famous one. Nobody remembers Lloyd Benson was Treasury Secretary for like a year and a half.
Right.
My point is it shouldn't matter.
Yeah, it should
Their
be
job
a
is
quiet,
to ensure... Go ahead.
It should be a quiet job where you are making sure the plumbing of the U.S. economy works
There you go.
well.
That's what I was just going to say.
That's all they have to do.
And Bob
It's
Rubin...
a tough job, by the way.
Clinton's...
But it's all you have to do.
Clinton's next to last Treasury Secretary got it absolutely right. He presided over orderly issuance and management of U.S. debt. And when asked something that was outside of his lane, specifically the U.S. dollar, which is not exactly outside of his lane, his response was always the same. And I know I say this every time I'm on, but Bob Rubin used to say a strong U.S. dollar is in the United States' interest. Full stop, end of sentence. No further commentary.
And if I'm not mistaken, Bessent just repeated that yesterday, didn't he?
Smart. He knows. He's a finance guy.
Yeah.
And when asked about the Federal Reserve, the Clinton administration, which set the tone for this in the modern era, used to famously respond with, we don't comment on the Federal Reserve. It's an independent entity. I suspect Bessent would respond with something similar, and he tried to sort of walk back some other administration officials' comments about Fed independence. Bessent said something like, and I thought this was pretty deft on his part. Oh no, we want influence over longer term interest rates, which is a perfectly conventional thing to say. So far, like you said, I think he's off to by the standards of some of the policy swings we've seen over the past few weeks, off to a pretty good start.
Another tax announcement that falls into the same range of Scott Bessent and Treasury and his previous roles. The Trump administration is apparently apparently, and I very much doubt this goes anywhere, taking aim once again at the private equity favorite tax perk of carried interest. So to make a long story short, carried interest is a bit of a tax loophole that allows those who work in deal-making areas such as private equity, such as venture capital and hedge funds, to avoid paying ordinary income taxes on the majority of their earnings and instead pay capital gains taxes. And if you are at all familiar with the tax code, you'll know that capital gains are always taxed at a lower tax rate than ordinary income. This has been looked at and attempted to be amended by Democrat administrations, very few Republican administrations, but once again getting a look from the Trump administration. And I just find it, again, interesting that in terms of economic stuff that we've heard about thus far from the Trump administration, it's been budget cuts, tax increases, and tariff increases. Want to know why markets are shaky? Where's the tax cuts? Where are
How are markets shaky, though?
They haven't been shaky.
They've been
But when they're responding to things like tariff increases, it's because it's not being accompanied by. And I'm surprised that you're hearing the reporting on the do away with carried interest, which I'm fine with.
They got to cut something, Mike, or raise revenue somehow, right?
If you're going to raise revenue, I think this is a great place to go after.
Yeah, nobody's going to defend private equity.
But it's not being accompanied by, and by the way, this is going to allow us to waive the taxes on Social Security like we were hoping to do. So it'll be fascinating.
That is why they're doing it, though, to pay for his other tax cut promises.
But those tax cut promises are not coming to fruition as quickly as I think they were hoping.
I'll give the Trump administration credit on this. It is a loophole. Many, as you mentioned, have talked about reforming it, including him in his first term.
Yep.
Didn't muster the will to or weren't able to for whatever reason. I'd be shocked if this actually went through. Private equity is quite
big
influential,
supporters,
and they throw around a lot of money. But these are exactly the types of, as you put it, loophole that they should be looking at closing. Good for them. Unfortunately, he's going to open about 50 other loopholes with taxes on tips and raising the SALT cap and whatever the heck else he was promising in the last 6-week giveaway bonanza of the campaign. So they're going to open up 20 loopholes for every one they close. But good for them. This is a sensible one to try to close.
Let's take a quick break. When we come back, Paul LaMonica from Barron's joining us to talk Etsy next on the Financial Exchange.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. By making a donation, you can support the Veteran Advancement Program, which offers permanent and transitional affordable housing to veterans and their dependents. The DAV of Massachusetts is the only DAV department in the country to lead a veterans housing initiative for single vets and those with families. Visit dav5k.boston to make a donation today, and make note for this year's 5K to be held on Saturday, November 8th. That's dav5k.boston.
Joining us now is Paul LaMonica from Barron's, talking to us about Etsy. And in order to talk about Etsy, Paul, we got to talk a little bit about these new rules on Chinese imports. I'm hoping you can do a better job than I did yesterday of attempting to explain the de minimis exemption of imports into the United States. Thanks for coming on.
Yeah, no, thank you very much. Yeah, I mean, at the end of the day, really, there had been this exemption on quote unquote cheaper goods, goods costing under $800, had been allowed to enter the U.S. duty-free, and Trump is getting rid of that exemption. So the companies that had benefited from that, a lot of Chinese e-commerce companies like Shine and Temu, owned by PDD, and AliExpress, owned by Alibaba, they could get hit, and that might be a benefit for, U.S. company Etsy, which does not have to worry about these tariffs as much, or competition, maybe as much competition from some of these Chinese e-commerce giants.
Paul, after the Super Bowl commercial, I think it was 3 years ago, I did test out, I don't remember if it was Temu or Shane, and bought a winter coat that I pretty much never wear this anymore. But do we have a sense for just how much these companies were selling products in the United States dollar-wise? And if these new exemptions go in, I assume that will take a massive hit and truly open up a door for the likes of Amazon and Etsy. Do you know how big these sales were?
Yeah, I mean, I don't have the numbers in front of me right now about what the amount of sales into the U.S. is, but needless to say that consumers had been flocking to these sites. You weren't obviously not the only one looking for cheap apparel. The lure of bargain goods is something that consumers always like. It's a reason why companies like Walmart and TJX, Jones Marshalls, and TJ Maxx, why they're continuing to thrive as well. There's been a lot of talk about how even wealthier consumers are looking to save a buck as well. So anyone that can offer merchandise at a discount has been benefiting. And Etsy obviously does that as well, but now they potentially have a lot less competition going forward, or maybe it's going to be tougher for competition.
So obviously Etsy's been around now for quite some time, but for those that aren't intimately familiar with it or haven't used the platform before, what's the typical type of thing people shop for on there? It's a network of marketplaces, but it seems on the surface quite a bit different than, say, an Amazon.
Yeah, I mean, collectibles, handmade goods. Or remember a couple of years ago, Etsy stock got hit when Amazon announced a marketplace that was similar to Etsy. But it's a lot of people setting up shops, selling handmade, handcraft goods that are not necessarily going to be a huge expensive type of item, but it's the classic volume game, and Etsy gets a cut from the sellers. So that is why this is a company that has done really well in the past couple of years. But I think the hope is that Etsy stock can finally get a boost as well.
To that point, the Etsy stock down about 25% over the course of the last year, presumably on a lot of this new competition. Any conjecture from analysts or just year to date what we've seen in terms of a reversal there?
Yeah, Etsy has made a bit of a comeback recently. I think on the hopes that the crackdown on Chinese competitors will help. Stock's not that expensive. It's about 22 times earnings estimates, so about in line with the market multiple. And some analysts are saying that that there's even U.S. companies that it competes with that it will be able to benefit at their expense. One analyst in the story I wrote mentioned that Wayfair, the home furnishings retailer, they could get hit by tariffs more than, say, Etsy, because they have about 15 to 20% of sales exposure, goods from China. Etsy doesn't really have that much exposure. And, Etsy's a cheaper stock than some other e-commerce companies like, Chewy, which is another company that some analysts have said they think will be able to hold up better because of tariffs, because pet food and drugs for pets are, largely made in the U.S. as opposed to abroad.
Paul LaMonica from Barron's joining us today to talk a bit about Etsy and the changes to tariffs on Chinese-made goods. Paul, thanks so much for joining us. Appreciate it. Talk to you next week.
Thank you. Have a good one.
I want to talk about fishing. Mark, is that all right by you? The pH kind of fishing. The tests on fishing, if you are out of the workforce, they are getting so entertaining and unique. But apparently making a lot of people fairly angry. So if you don't know what I'm talking about, if you have been out of the workforce for a few years, you might not be familiar, but the attempts by bad actors to gain access to company systems and take them over, lock them down, and then demand ransom for unlocking them have gotten so successful and so rampant that companies now test their employees. And I actually just got one of these this morning. It looked like a password reset that I had requested from a system that I use. And it said, we got your password reset request. Click this link to reset your password. I looked at the email address and it clearly wasn't from a system that I use, so reported it as spam, and a little congratulations went up on my screen saying, hey, good job. This was actually a test from your IT department. But those IT departments are getting fairly creative. One of them sent an email to a professor at a university saying that there was an Ebola outbreak at their university. Another one sent a phishing test. What was it? A NASA staffer apparently was brought to tears from a phishing test, promising the employee a chance to win a trip to the Kennedy Space Center to view the final launch of the space shuttle. Sorry.
That's cruel.
Which was pretty cruel. But I have to tell you.
Final launch of the space shuttle.
I have to tell you, I don't think you should be upset about this because this is actually what's required to prevent this stuff. It's horrifying, and I'm all in favor of it. Quick break for the entire weekend. Markets pretty strongly in negative territory now with the NASDAQ off more than a full percentage point. We'll be back at it on Monday. Have a great weekend, everybody.